Market outlook. Calendar week 45 last week was shaped by the US Federal Reserve's meeting on October 29. As expected, the Fed lowered its benchmark interest rate by 25 basis points. However, the key signal came from balance sheet policy. The Fed announced it would end quantitative tightening as of December 1st. The ongoing net reduction of its securities holdings will stop. A structural liquidity drain that has weighed on markets since early 2022 will cease. From that point onward, the Fed's balance sheet will remain constant as long as money market stability is ensured. For digital assets, this does not represent a direct buy signal, but it does mark a structural easing. The Fed remains data dependent. No easing cycle is currently signalled. Markets responded with caution. Intraday spikes were sold off, and trend attempts quickly lost momentum. In this environment, we did not activate any research signals and deliberately remained on the sidelines to avoid unnecessary drawdowns and preserve flexibility for clearer setups. Assessment. The QT stop marks a turning point in liquidity policy. The gradual withdrawal of central bank reserves ends, reducing the risk of technical market dislocations and stabilizing the structure of market liquidity. However, transmission is not linear. It moves through short-term rates, spreads, funding costs, and order book depth. When paired with a softer macro environment, this can act as a tailwind for risk assets. If macroeconomic pressure remains high, the effect will fade. For digital assets, this means liquidity does not guarantee direction. It merely sets the conditions in which direction can emerge. Outlook for week 45. BTC dominance remains near 60%. Capital continues to favour stable core beta, while altcoins react selectively to individual news and events. The Fear and Greed Index stands at 33 points, signalling caution but not panic. Technically, the environment appears stable but not impulsive. Only fresh macro impulses will determine whether market breadth can expand. Structural risk has declined, but directional risk remains. Macro calendar. On Monday, the US ISM Manufacturing Index will offer new insights into cyclical momentum. Tuesday brings the Reserve Bank of Australia's interest rate decision and policy statement. Wednesday follows with US services data and the ADP employment report. On Thursday, the Bank of England will announce its rate decision. The week concludes Friday with the US non-farm payrolls, the key market-moving event. Any of these releases could trigger sharp, short-term reactions, depending on whether they deviate from consensus. Market view. A softer data print, with moderating inflation pressure and stable employment, would reinforce the QT stop as a constructive shift. Lower rate volatility, a softer dollar, and improved risk appetite. In that case, digital assets could gradually shift out of defensive mode. However, if data surprises to the upside, the Fed's restrictive tone may return. Risk premiums would rise again, and digital assets would remain vulnerable to fast but unsustainable swings. Market breadth will be decisive in both scenarios. As long as capital primarily flows into BTC and altcoins move only on isolated news, there's little collective conviction. That conviction does not emerge from political rhetoric. It arises when structure, price, and timing align. Quantum's approach. We remain defensive and adaptive in week 45. During periods of dense data, such as around NFP or the BOE decision, we deactivate automated signals. New entries occur only after confirmed market absorption. Risk budgets remain moderate. Stop levels are set tighter. We prefer swing or mean reversion setups with clear invalidation. In whipsaw-like conditions, we refrain from signal activation. Quality over frequency. Conclusion. The Fed hasn't eased policy, but it has given markets room to breathe. Ending QT removes a persistent headwind, but it doesn't yet create a trend. For digital assets, This means those seeking direction must remain patient. We stay focused, data-driven, and ready to respond. Disclaimer: this analysis does not constitute financial advice and does not contain any recommendation to buy or sell digital assets. Quantum data analytics: analytical, strategic, innovative,